Today is Tuesday, April 30th, and this is another update on my progress beating the S&P 500 along with the Ark Innovation ETF. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. Same as the last episode, I haven't added to any of my positions at all or opened up any new ones. Jerome Powell speaks tomorrow at 2, and I wanted to keep everything exactly the same. The plan is to see what he says, and then we're just going to go from there. So today the employment cost index came out, which is a quarterly report. Everyone was expecting a 1% gain, and it was actually a 1.2% gain. What the employment cost index measures is how fast wages are going up for employees. So since it came in at 1.2% versus the 1%, that means employees are getting paid higher wages at a faster rate than expected, which is something that's going to lead to higher inflation. Because if you pay your employees more, you're going to have to raise your prices to match it. The low unemployment rate probably has something to do with this. When the employment rate's low, employers have to pay their employees more money to attract them in, which also goes against what Powell says we need to do to fight inflation. He essentially says that wages need to stay stagnant and the unemployment rate needs to go up. And right now everything's doing the exact opposite, which is why it's looking worse and worse as far as getting any rate cuts at all this year. We checked this out last week. This is the CME Group FedWatch Outlook charts, which predict the probability of Fed rate cuts. Last week for July, there was a 54% chance that there would be no rate cut, and now that's spiked all the way up to 78.4%. This is the September chart I wanted to keep my eye on. Last week, there was a 28.6% chance of no rate cut in September, and now that's also gone up to 54.9%. This is the chart for the November 7th meeting. I wasn't sure what it was last week, but right now it's a 43.3% chance of no rate cut in November. So obviously last week it must have been lower than that, but it's definitely going to be interesting to keep an eye on this because it seems like they're going up pretty rapidly. And especially if all these reports keep coming out that kind of don't support inflation coming down, I definitely see having higher rates for longer than expected. So the SPY chart's definitely made a reversal since the last episode. You can see on Monday that the SPY tried to test this red trend line, but ultimately bounced back down from it. Honestly, it's not shaping up very good for the speech tomorrow by Jerome Powell. We're heading straight for this red resistance level, which you can see the last time we tested it, we came just below it, but ultimately bounced back up. But the fact that we came up here and retested it, but bounced back down isn't good. All the gaps in between these resistance levels isn't that much. This bottom one is about a 2.5% gap. This middle one is smaller at 1.25. And then where we really want to be is all the way up here, and that's about a 3% gap. What's really concerning about being right at this resistance level is that it's about a 5.5% drop all the way to the bottom one, and there's nothing really to catch it in between. So that's why I've been so light in my portfolio and even going into the PSQ, which is a short position. Because if Powell speaks tomorrow and we go below that red resistance level, I don't know if we're going to bounce back up from it like we did before. At this point, no one should really be shocked if he says that there's only going to be one rate cut this year, but the fact that he's probably not going to come out and say that tomorrow is what's going to lead to all the speculation. So these are all my current positions. Same as last time, everything's pretty much in the red except for a couple of them. But there's such small positions, I'm definitely not concerned about it. I only have 33.31% of my portfolio invested, with 23.59% of that being long and 9.72% of that being short, with 66.69% sitting in cash. So even if the market does react negatively tomorrow, I'm not in that bad a shape. Since Monday, my portfolio dropped 0.31%, the S&P 500 went down 1.23%, and the Ark Innovation ETF saw a loss of 1.38%, which brings us year to date, my portfolio has a gain of 14.28%, the S&P 500 is at a gain of 6.17%, and the Ark Innovation ETF on the year has a loss of 13.94%. That's all I got for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.